What's up, YouTube? Today I will be doing a video over my perfect entry model. What I mean by that is the entry model that I have been using and will continue to use while trading. And I'm going to go over everything that consists over this model and how you can use it in your trading to find very good setups within the market. If you like what I have to say, please consider giving me a like and subscribe. It really helps me a lot whenever y'all do that. And also don't forget to go to my other socials and go support my stuff over there as well. And without further ado, let's get right into this video. So before I actually get into the entry, I'm going to get into a little bit of a overview of what I want to see price do before the entry actually is given to me to make it even more high probability of a setup. And so first, what we do here is we kind of just set up our high time frame liquidities. So we see that we're in this range, we've expanded up, and then we kind of retrace down back into this range. And so we have this 1 hour sell side down here, and then we have this 1 hour buy side right here. And what my trade setup is I look for reverse entries. What I want to see price do is kind of form some type of range that I want to see with high time frame liquidity on both sides of price. Come to the sell side and go to buy side, or vice versa, go to buy side and come down to sell side. What we do now is we just wait for one of these liquidity pools to get basically tapped into and interacted with. And so let's play price. As you can see, price is going up to this buy side. And so we see that we get a big push out of this buy side. And so now I'd be looking for price to reverse down to this sell side that we marked before. Let's zoom in a little bit. We see that my first confluence of this trade entry is a market structure shift. And in this case, it'll be a market structure shift to the downside. So how to mark out a market structure shift is by marking out the low of the last manipulation leg. So what that means is that this up move and down move formed a high, and this high got taken out by this move up. So this low within this move up would be our market structure shift level. What I want to see price do is I want to see price come below this with good displacement. And so we see that we form kind of a high, we get a big wick down, and then another wick. So now we see that we got the first step of my strategy, which is that market structure shift. So now that we have a market structure shift, what I want to see price do is retrace into the equilibrium of this expansion down. So anything above this 2.5 range and this 0 range, like anything between this, is good price to enter off of. And what I will also do is make note of any imbalances left behind in this equilibrium range. So as we can see here, we have this inverse fair value gap right here. So we have this inverse fair value gap, and then we also have this this bearish fair value gap. So now we have two bearish imbalances overlapping, and what I call that is a BPR. So we can just take this out because this was the fair value gap, this was inverse. The overlapping range is the BPR, so that's what's left here. And so now I have a pretty good idea that I want to see price tap into this BPR. And so if we fast forward a little bit more, we see that we form a order block. And what an order block is it's a four high-low pattern. And what that means is, I'll show you a bearish example right now, is you see that we form this high here. We form one high, then we form a low right after. And so we have this high and then this low. But after this low is formed, we want to see this high be broken past above. So we see that we now formed a higher high, and then after this higher high, we want to see the same thing happen to this low and see a lower low be formed. And now we have a high, a low, a higher high, and then a lower low. And then the second high or low made would be our order block position. So now we see that we have this order block within this order block, and then within the order block is equilibrium, and within the equilibrium is a BPR. So this is basically my perfect setup right here. Is I would like to see price come up to the BPR. I'd place my stop loss at the top of this range, and then I would place my take profit at the bottom of that other liquidity here, and then take off like partials at like a swing low like this, for example, because this is also sell side liquidity. So now you have a very good idea of how I actually take my trades with the market. We see that this is a 5R trade, very, very good trade. And we'll zoom in and kind of play and let price do what it does whenever you see a market structure shift and then price retrace into an equilibrium and order block and a BPR. So we'll play price. We see that price wants to rebalance. We tap into the equilibrium and that order block, boom. Right here, I'd be into the trade. Stop loss at the top of this range, and then take profit, like I said, all the way down here at this 1 hour low, and then take partials off right here, which would be a, let's see what this would be if I took partial. A 3R trade, which is also very, very good. And so we see here, I'll just put 3 sells, stop loss at the top, and then take profit at the bottom. And then we'll change this to 2 contracts. So whenever we reach the sell side, I'll take partials off. And so now we just let price do what this trade, and when I tell y'all this is like the perfect, I mean, this is what works best for me. Like, I trade this is how I get into trades, is this exact model, the equilibrium retracement, the order block retracement, the imbalance retracement. That's what makes this strategy so good, is that this happens so often within the market, and every time I do it, it seems to work out pretty well. And yeah, this, I just want to tell y'all my strategy so you'll have a better understanding. I also post a lot of trade recaps of me taking trades over the same strategy, so you can see me with more context, like daily bias, and so I can take even better efficient trades. So let's just let price do its thing. We see that we get a big expansion down, retracement back into this order block one last time, and then we push right back down. We see within a couple candles, we have hit our first TP. So there would be there. Then you move stop loss to break even after first TP is hit. And then, yeah, then you just let price keep on going. And I don't know my exact win rate with this strategy. I will do a video over that, calculating all my trades in this last like 2 months. But once that video comes out, I will give all the credit to this trade entry, because the high time frame liquidity sweep with a market structure shift to the downside, retrace back to equilibrium and an order block and a BPR. That's just what you love to see. And you can see right here that final TP does indeed get smashed. There it is. And that's really all it is. It's that simple. Just really 4 confluences here, and then a high time frame liquidity sweep. And that will wrap up the video. Thank you everybody that watched. I hope y'all learned something and maybe start trading like me. That would be very, very compliment. Also, before you do start trading like this, don't forget to backtest this entry, because you have to gain your own confidence within this trade entry to actually like see progress. Don't forget to go to my socials and support me over there. Greatly, greatly appreciated, and have a great day.